Hey everyone, Eric Mashinsky, Saturday, June 4th. Just a brief video update along with what you'll get tomorrow, which is some charts that show what I'm talking about. We had a big bullish confirmation on Friday in the gold miners. I just sent out this week, which I've been a little quiet because of traveling and so forth, but really I've sent out a note to my elite members that it was a great time this past week, and it now is even probably more so. An awesome opportunity to really load up on your favorite gold miners because we are sitting and hugging, and we have been hugging the 50-day moving average. And usually what I use for this is GDXJ. GDX can be okay as well. And you'll also see a good amount of the miners in general, mostly the producers. Some of the small ones tend to move on their own volition to a degree, but GDXJ is a good barometer for what the sector is doing. And so, what we did see and what I had mentioned was we've had a several week consolidation and pullback. The first one where I think people really were wondering, is it over? Is the rally done, or are we going to go through a very severe summer correction? I know it crossed my mind. And what I wanted to see next was evidence that the 50-day moving average would hold and reverse. We saw that on Friday in a big way when the jobs report came in very, very weak, and it became evident that the Fed is not going to raise rates in June. That's the catalyst, but the fact is we're in a secular bull market in gold, silver, and mining stocks. We've really entered a new cyclical bull market in January. So I don't really focus on the reasons too much. Why is it going up today? Why is it going down today? It's going up from here. That's what I feel. So that's the important thing. What the details are and why people decide to buy on a particular day and it reinforces that action, I don't really care too much. But I was telling the elite members that it's a great time to load up, because what we could do is really just put a stop, a hard stop. You could actually go really heavy into the favorite ideas that you've got, into GDXJ, into McEwen Mining, GGN, these type of stocks, because if they were going to break down and we were not going to hold the 50-day, where we basically would get a sign that this is going to be a longer correction, could be more severe, maybe to the 200-day moving average, that would have been possible. It's still possible, but it actually became much less likely because of Friday. We saw recapturing of a bounce off the 50-day. It's not confirmed. We want to see a few more days of action, but I think what this is doing is it's the first day on Friday where Monday, the first day after the confirmation, where you are going to buy stocks on a pullback from their recent highs, and they're going to new highs. This is the time that you want to be buying. What's really critical, and I've talked to everyone about this before, we've got to have contrary action and a mindset that is very, very clear. There is no question in my mind that we're in a new bull cycle. You've got to be very, very long. The risk is being out of this market. That's the fact. If you are putzing around and dabbling and not quite sure in this sector, look, this is an opportunity to get wealthy. This is opportunity for the wealthy to add to your wealth. This is not a time to be wishy-washy or double-minded unless we get the evidence in the market. If the charts start to break down, then so be it. We need to get defensive again. That could happen. But until then, right now is a great time on Monday to load up on the ones that you missed, that you were starting to think, wow, these things are just getting away from me. The rally was so explosive starting in late January until really into April that we missed. A lot of people missed the lows, missed the second pullback, which was really just a consolidation. And so now's the time where I would really encourage you to zero in on the deals that you missed, that you really want to own. And really what I've been doing is on Friday and last week, I was doing this all last week when I had extra cash available, I started to bolster my positions in 3 stocks I was very active in last week. One is McEwen Mining, MUX. Buying that thing in the low twos, mid twos. This stock is going to go back to its old highs. I think that the real reasonable target, I talked about this in the GDXJ blog report that I did a couple of months ago. Really what the most reasonable target is for a lot of these companies, is to retest their highs from 2011. And so that's a long way up. But what I think will eventually happen is they're all going to go to new highs because we've had such a washout and their decline was so severe. There's less companies to put capital into. There's capital that is now able from an institutional level to go into the various ETFs that will drive further demand for these stocks once they feel like they need to own them in their portfolio. And the companies are lean and mean, so I think there's a really good chance in this cycle. In fact, I'll tell you right now, we're going to new highs in these plays, which is a ways off potentially. But keep in mind that just to retest the old highs, McEwen Mining, for example, this was 5 years ago. Now it's a much better company, cash flow positive, a fantastically run organization with a massive copper deposit that really isn't being valued much at all. Their gold and silver operations and assets are terrific. So I would say that, you're buying at 2.5, and you're still talking about a 4-bagger to get back to $10, which it was earlier. It's been there twice. It was there when McEwen signed on and acquired the company and rolled 3 deals into them back in the early 2000s, and it's hit 10 in 2011. And I think it'll hit 10 in 2017 again. So McEwen Mining, very, very aggressive. In fact, part of me is really a little frustrated because I would really like, with this one and GGN, for example, I would like to own, $1 million worth of this stock. I've got a lot of confidence that this thing is going much, much higher. And until it breaks down on the technicals, right now is the time to put a big bet in. And you can protect it. What's your downside? Well, your downside is if you buy it here, you buy it, I don't know where it exactly closed, but 230, 240, 250. Forgive me, I was in New York yesterday and did not get to the closing prices. But you can go ahead and you can load the boat and then look at, if we break below the recent lows under the 50-day moving average, especially for more than one day, stop out of it. You're talking about 10% downside, 10 to 15% really is what your downside would be. Maybe 20 if you wanted to keep some loose stops there. That's your downside, and your upside is 400%. Good risk reward. You also have an opportunity, I think, for bigger money to go into a GDXJ here. And then the one that I really like, which pays us a 13% dividend at this price, is GGN, the Gamco Gabelli Gold and Natural Resources Fund. I've written a blog on this as well, fairly new research report. I'm levered up in this one because my margin rate is low and the yield is high. I'm making that money on borrowed money from just the yield, and I'll get capital gains on the increase in price in a new bull cycle. This thing was $30 a share in 2010. It's 6 and change. So there's a lot of money to be made in that one. You can also accrue quite a bit of income. My fear is that this might be the last time I'm pounding the table to buy these. The only time I see it in the future, because if they go to new highs now, the only time I see it in the future is somewhere quarter, third, midway of the cycle. We're going to have a really scary shakeout. Something will happen where this stuff will just get smoked for 30, 40, 50% short-term declines. Really shake the trees hard. And that will be one, or that'll happen maybe a couple times in the bull cycle where you can really add to your positions and feel good about it. But they're going to come from higher levels. So I think that now is one of the last times I think we could see GGN in the sixes, certainly in the low sixes. McEwen Mining under 2.5 on the NYSE. I priced that. It's an American company based in Colorado, even though they have a Canadian component. I always talk in the country that the company is trading. A lot of them have Canadian symbols as well. Two small ones that I would say back up the truck, even though it's tough to buy a lot of these. There is some liquidity in Patriot Gold right now. PGOL. There will be a Canadian listing within a month or two, maybe even in June. So our Canadian fellows can participate here as well. This play is turning out fantastically. This is the one. This is not one that I was super active in this week, just because I just put more money in a private placement recently, and I own about 4.5% of the company. So it's actually my largest, really tiny junior position. So I've got enough of it, but and I've got a lot of warrants and things as well from the private placements. But anything under like 11, 12 cents on this thing is great. And there has been some selling. You know, this is a very tightly held deal, low float. You know, reasonable shares outstanding, 50 million or so, and the float is tightly held. Guys like me, the chairman, Bob Koppel, we own a very significant amount of the company, and we're looking for much higher prices before liquidating any significant amount. So the people that are selling now, I think, are folks that invested in a 5-cent, 6-cent private placement about 2 years ago. That are just taking their money off taking their principal off the table, maybe selling the whole thing. But that's great. You know, that's an opportunity to take a position here, because this thing could thin out overnight. After whatever selling is done, profits are taken, we could see this thing just lock up and start to gap higher. Same thing with, actually, it's a little bit different. Timberline. Timberline's a lot different, forgive me, in a sense that this thing should be trading well over $1 a share US right now. It should be over $1.50. It should have hit over $1.50 and be trading right now. If it was just a comp in the sector, it should be trading between $1 and $1.50, and it's, you know, not even 40 cents. So this one has got a long way, a lot of catching up to do, and it was delayed in terms of its move because of conditions around the business and a lot of changes, management movements. People weren't exactly sure what was going to happen there. Financing, they were running on fumes with cash. I stepped in and funded the company. We are looking at a situation where we started off at about $500,000 financing, and it's gonna end up oversubscribing at 1.5 million. So this is going to bring enough cash for this company to make the moves that they need to make to move forward. But they already have two tremendous assets. One is tremendous. One is very valuable. A third is highly prospective. Tallapoosa has got 1 million ounces in the ground. Eureka has got, I forgot the exact number. I think it's 900,000. This is a resource, not reserves. And the thing is trading for nothing. You know, there's only 15 million shares outstanding. So post the financing, it'll be 25 million shares out or so. And, you know, even at $1, you're still talking about $12, $13 an ounce gold in the ground. You know, this is a really extraordinary situation, which is why I stepped in. And I think that you've got to have the foresight to do it in a position where, look, I knew that we were scraping the bottom on this thing, got aggressive in taking the position. Nobody else wanted to touch it. Sure enough, now that we've got the financing oversubscribed and the stock's moving up, they're getting calls all over from New York and everywhere else with people wanting to finance them. And people buying the stock because they know it's a great value. They just don't want to be the first in. So we were the first in. We're benefiting from that now. And if you didn't invest in the private placement, you know, you should be a buyer in the open market. I don't like to chase these things, but I think you could buy Timberline all day up to 50, 60 cents, because this probably goes to $5 next year. It certainly could, maybe 2018, but it's been there before. Pre-split, that's where it was. And this thing is, you know, there's a lot of big good things that could happen with this company. Sky's the limit after this financing. There could be some blockbuster stuff that happens in terms of people getting involved. And this, the work they could do at Tallapoosa to beef up the metallurgy could really make them an attractive acquisition candidate. So I would really encourage you on Patriot, Timberline. Those are the micro caps that are special situations that I own a lot of, that I think are going to make a fortune over time. If you want to go heavier, my focus has been on GGN and McEwen. There's others, obviously, that we cover across the board. You can probably buy just about anything. We've been long Kinross since $1.40. It's already tripled. IM Gold really is more than doubled. We were buying that in the ones. So, we've got those core positions on. They're not core positions for me. They're smaller positions, but we've got such good prices. They could end up going up 20x for us by the time this is all said and done. And really, I think you can see my face. I'm not hyping this up. This is what I believe in terms of what's going to happen in the bull cycle. I have an understanding of what can happen, and I think people tend to think in the past. They think in the immediate past, and that's why so many people have had a tough time pulling the trigger and getting as involved as you really should. Take a step back. Say, look, if gold's going to 2,000 an ounce and silver's going back to 50, how much money would I want to have in this sector? And what would I want to make? And take action, because I think it's not only going there, but it's going a lot higher. All the tea leaves are ringing. Things are falling into place for this sector to have a massive run. Friday, we got a bullish confirmation. I was starting to wonder if it would hold. I think now my confidence is very high that it will and that we're going higher. If we reverse Monday, so be it. We'll go a little bit defensive. But that's why you can buy now. The strategy that you use on how you buy and sell stocks is important. And I'm actually thinking about putting a course out on this, because people have a real tough time with, how do you take positions in these small companies? How much do you allocate where? How do you put in stops? How do you sell? Do you sell it all at once? Do you take off thirds? Do you sell half at a double? These are all really important things that you should know what you're going to do on the exit for the most part before you buy the stock. If you're shakeable, you're going to get shook. That's just really the fact of the matter. It's too volatile of a sector. Let's say, for example, if McEwen was gonna go, if say its destiny was to go to $20 a share, there's gonna be multiple opportunities where it is gonna try to buck you off, and it will be successful for a lot of people. So if you want the 10 baggers and the 20 baggers in this sector, we have to earn it. We have to earn those times where it's really scary, and holding through them and even buying more perhaps. We've got to be patient at times. And then if things get way extended, we do have to be flexible enough to take stock off the table, even if we think gold is going higher. People know me in my community and my friends and everything. I'm the gold guy, and I had 2 friends recently call me a gold bug. I'm not a gold bug. I'm a gold bull. There's a big difference. I'm not a perma bull on gold. There will come a day when I will tell everyone I am fully out of my gold and silver. Maybe not the physical. I'll probably always hold some physical. But there will come a time where I'm out of the mining stocks. And that day is probably not for a while, but that day will come. And that's the day I just go like this, and I'm out of the game probably for a while. So. But that is, there's going to be a time to be defensive. There's going to be a time to be taking profits. There's going to be a time to be liquidating, but that is not the time now. The time now is to be a buyer, to be an aggressive buyer, to have big, meaningful positions, not like, oh, I own some of that one, or, I have a bunch of friends that I told to buy gold in 2005. They finally bought it, or silver, or the mining stocks in 2011 when they saw it in the news every day. And then when I meet them anytime over the last couple of years, well, I still own my silver wheat. I didn't sell it, so I'm still in it. Like, what are you talking about? The stocks are at the lowest point they've been in 90 years, and you're not putting new money into it to pay yourself for the time and agony that you've suffered these 5 years in terms of a bear market. You're not in the game. You're hanging on and rationalizing by a thread because you own one or two mining stocks, or you have, $5 grand in a junior and you think you're participating. This is not playtime for me, and it's not playtime for a lot of people that I work with in this sector. We're in this deal, and I'm zeroed in on it because this is where there's going to be a lot of money to be made going forward. And if you know what you're doing and how to play it and how to find value, which is what I do, that's my job for you. You let me vet the deals. But if I vet the deals and you're capable, do your own homework as well. You've got to feel confident like I feel confident and why I feel confident. If you don't quite understand how this all works, then, I don't blame you for not going all in, because if you lose money or you make the wrong decisions, you're going to blame someone. There's nobody's responsibility but your own in terms of what you do with your money, the bets you make. So look, I just want to be clear when there are times when I've got conviction, when I'm taking action, and I don't want to rely on hype when things are moving so fast or they're already at the top of a run. People come to me and they say, do you still like this one or that one? I'm telling you now, now is a really good time to be adding to positions, to initiate positions, because we're on a pullback. We're testing the 50-day moving average. There's been a pretty long consolidation from the highs. You're getting a discount from the highs, and this is probably the best you're going to be able to do. If you're waiting for these stocks to go back to their old lows, the train has already left the station, and it's about 4 or 5 stops away, and you're waiting for it to come back, and it's going across the country. So really, very encouraged by the action on Friday. Feel very confident that we're going higher. Wish I had a couple million sitting around in cash, because I would put it all to work in the gold miners. I'll tell you that much. I'm not messing around. I'm trying to, with liquid capital that comes in when there's opportunities like this, I feel confident risking a lot of money, because if the charts break down again, I'll stop out. My downside, I'll gladly take 15, 20% risk right now for 2, 3, 4, 5, 6, 800% upside, which is where I think we have to go, in the gold miners, because history's told us this is what these things can do. They boogie hard, they boogie fast. They also go down hard, they go down fast. But we just came out of that cycle. So new cycle, new ball game. Thank you for listening today.